Prepare a common size statement of XYZ Limited from the following information. Now students, you are clearly required to prepare a common size statement from the following information, and the information given here relates to income statement. So we are preparing common size income statement, or rather you can use the name common size profit and loss account as well. Now you are given sales, cost of goods sold, indirect expenses and rate of tax. So students, the format goes like this: common size income statement of XYZ Limited for the year ending 31st December 2005 and 31st December 2006, assuming that the years are closing in the month of December. Now students, the format includes particulars: 2005, that is the previous year; 2006, that is the current year. Then the columns in between them are as a percentage of sales. This column belongs to year 2005 and this column belongs to year 2006. So first of all, we will have sales. In first year, sales is rupees 10 lakh, and in the current year the sales are rupees 12 lakhs less cost of goods sold, that is 6 lakh and 8 lakhs. Now students, subtracting the cost of goods sold from net sales will give us gross profit. So we will have gross profit for the first year as 10 lakh minus 6 lakh, which comes to 4 lakh, and for the second year also it comes to rupees 4 lakhs. Out of this gross profit that we have earned, we will now deduct indirect expenses. Indirect expenses are related to your office expenses. They include expenses like repairs, maintenance, like office and administration expenses, selling and distribution expenses. Such expenses collectively are known as indirect expenses. They are not reflected on the goods produced directly. So less indirect expenses. Indirect expenses for the first year are rupees 1 lakh, and for the second year they are also 1 lakh. There is no change in the value for the 2 years. Now students, once we deduct indirect expenses, we actually get operating profit. But in this case, no miscellaneous incomes, other incomes or other expenses are mentioned. So what we'll get directly is net profit before tax. Net profit before tax is 4 lakh minus 1 lakh, that is 3 lakh, and 4 lakh minus 1 lakh, that is 3 lakhs. Now students, out of this net profit before tax, we will deduct tax or income tax, which is 50%. Obviously, the tax that we have to pay would be calculated on the profit before tax. So profit before tax is 3 lakh in both the cases. So that would be 50% of 3 lakh, which is 1,50,000 and 1,50,000. Once we deduct it, we'll get net profit after tax. $1,50,000 and 1,50,000. So students, all the figures that were given here have been accommodated in this format. We have calculated gross profit, net profit before tax, and net profit after tax. Now coming to the calculation of percentages. Remember students, it is a common size income statement. In this case, all the percentages for the respective years will be calculated on a common base. So we are taking sales as the common base. That means for year 2005, all the figures would be calculated on the basis of sales and converted into percentages. And for year 2006, 12 lakh, that is the sales for this year, would be taken as base for converting all these figures into percentages. So let's see how these percentages would be calculated. For year 2005, we are taking net sales as the base. So the percentage for this figure can be calculated as 10 lakh divided by net sales, which are again 10 lakh into 100. So that will give you 100%. Then students, coming to cost of goods sold. The cost of goods sold in this case is 6 lakhs. So it can be converted into percentage by taking 6 lakh divided by net sales, which are 10 lakh into 100. So we'll get percentage as 6 lakh upon 10 lakh into 100, which gives us a figure of 60%. Then we have 4 lakh, that is gross profit. 4 lakh divided by 10 lakh into 100, which is 40%. Then students, indirect expenses, they are 1 lakh. We can convert them into percentage as 1 lakh upon 10 lakh into 100 is 10%. Then we have 3 lakh. 3 lakh divided by 10 lakh, again taking net sales as the base, into 100 will give us answer of 30%. Then 1,50,000, that is tax. 1,50,000 divided by 10 lakh into 100, that is 15%. And lastly, again the same figure, 150, that is 1,50,000 divided by 10 lakh into 100 will give us 15%. So these percentages now represent the share of these, all the observations or the items based on net sales converted into percentages. That means the cost of goods sold represents 60% of the sales. Similarly, indirect expenses 1 lakh, they represent 10% of the net sales. Now coming to year 2006. For year 2006, we'll take net sales as base. So that means all the figures would be converted into percentage, taking 12 lakh as the base. So the first would be 100%. The second would be, that is the cost of goods sold would be 8 lakh upon 12 lakh into 100. 8 lakh upon 12 lakh into 100, which comes to 66.67%. Similarly for gross profit, 4 lakh upon 12 lakh into 100. This is approximately 33.33%. Then students, we have 1 lakh. This is the indirect expenses. So 1 lakh upon net sales, which are 12 lakh into 100, will give us 8.33%. Then 3 lakh upon 12 lakh, which gives us 25%. Then 1,50,000 upon 12 lakh, that is 12.5%. And lastly 1,50,000 upon 12 lakh, that is 12.5%. So this is the way we calculate percentages.